Hello, this is Jordan. This video is being recorded right after the close on Monday, May 8th, 2023. Thank you so much for joining me. In this video, I'm going to talk about the weekly outlook, the short-term outlook for the precious metals sector. And as we get into it, precious metals are at an interesting juncture for several reasons. But the main reason is that in recent weeks and recent months, precious metals have become fairly overbought. They have very strong momentum. Gold is on the cusp of this huge breakout. And it's a good sign that they're very overbought. We see the bread thrust in GDX and the gold stock. So all these things are pointing to higher prices, over the next couple months, most likely. Yet, in the short-term sense, it's hard to say if they're going to correct a lot more or just a little bit more, or is gold suddenly going to just begin that push above 2050 or 2060 any day now. So I don't want to belabor the point, but that's kind of where we are in the very short term. And that's what I've been saying in the last couple of weeks. With respect to the stocks, the miners, they're very overbought, but that's good at the present time. They're coming out of a bear market. You don't have that many sellers. But at the same time, they need more correction, be it in a little bit more time or a little bit more in price or a combination. They need more before they can pull away and launch a sustained move higher for that next leg higher. So with that preamble aside, let's get into the chart. So we have the weekly candle chart here for gold and silver, gold at the top, silver at the bottom. And the last candle, that's just one day of action, so not that important. But what I want to focus on with both gold and silver is you look at gold, you look at those horizontal blue lines right around 1980. So even though gold is very overbought and it hasn't been able to break above, call it or close above on a weekly scale, I think 2028 or 2030, that's where the all-time high is, hasn't been able to close above that yet on a weekly basis. But if you look at the last 5 weeks, gold has failed to close below 1980. So very interesting. It's in this very tight range here. And we'll see if this week or next gold is able to finally make a weekly close above 2030. And I think if you do get a significant weekly close above that level, or if you get a daily close above 2050 or 2060, that could trigger the move above 2100 that we've been talking about in recent weeks and recent months. So that's where we are. Now, if there's going to be more correction here in terms of time, obviously 1980 is the first level. I'm also looking at 1950, and the 100-day moving average there is at about 1932, or maybe a little bit below that. It's a weekly approximation. So we'll see if, I think the 100-day might be at 1920 or so. I'm sorry, I should have checked that before. But anyway, the 100-day, the 50-day moving average, or it's coming up around 1980. Then you have the 100-day, call it 1920 or thereabouts right now. Those are the key support levels to look at. But, that all becomes moot if gold breaks above those prices that I mentioned a moment ago. Now, silver has been acting. It's been showing no weakness relative to gold. So that's a very good sign. And you look at silver, I'm just counting again, in each of the last 5 weeks, it's closed above, call it 2450, that resistance from the end of 22 into January 23. And you look at the last 3 weeks, silver has come down and tested fairly close to 2450. So the close last week, a strong close after testing that support for that week and the 2 weeks before. The weekly close last week for silver, I think that it was the highest weekly close in over a year. And I think the second highest weekly close in the last 23 months. If we're looking at the levels for silver, would love to see a weekly close above, call it 2650 or thereabouts. It's the second of the thinner lines. You get a weekly close above that. Then what comes into play is that strong resistance around 28. So that's how silver and gold are looking. I mean, still good in the short term, but wouldn't be a surprise if they needed to correct more a little bit in terms of price and time, or price or time. Remember, it can be a combination of both. Now, looking at the miners, I think you have to like the short-term action here. I mean, look at GDX, look at GDXJ. I've adjusted the blue support lines, and like silver has done, we can see that GDX is holding above, or has held above, the high, the January high. That support. GDX has come down, and if you look at the far right there, and you can see the candles over the last, what is that, 3 weeks or so, or close to 1 month. Look at the candle action. We can see how GDX came down, and it spent 1, 2, 3, 4, 5, almost 7 days testing, call it, 33, 33.25. So it spent quite a few days consecutively in that area. Then it was able to launch all the way up to 36.25. So at this point, I think the balance of the probability has to favor that, the corrective low in terms of price is likely in. Even if GDX were to correct more and come back down, I would, looking at it, I don't think you would see it go much lower than 33.75 or 34. Same thing with GDXJ. You look at the corrective action there, spent 1, 2, 3, 4, 5, 6, almost 7 days testing, call it 39.50. One day it tested 39. Then of course last week, I think after, what was that, Tuesday, you had the big reversal from early weakness, and then the strong close. GDXJ closed almost at 41. Even on Friday, it sold off after the jobs report and came down to almost 40.50. So looking at the daily candles and the recent price action, I mean, it looks bullish. It looks like they've put in a short-term low. And if you're just, you go back to the main charts and not the recent candles, it's bullish price action. You see, I don't want to say there's a cup and handle action here in the stocks, but this is even stronger action than a cup and handle pattern. And the reason being, especially with GDX and GDXJ, is they were so much stronger on the April peak, relative to the January peak. So that tells you it's even stronger than a cup and handle pattern. Now, SILJ at the bottom, that looks like it could be a little bit more of a cup and handle, not as strong as the others. But nevertheless, it just, you can't always go by looks. I mean, I mentioned that in another video, but we're just evaluating the price action here, and this reflects a bullish market. The price action is bullish, be it short term or medium term. And go back to what I said in recent weeks. You had the breadth thrust in GDX, which argues for more upside. So looking at that, and of course looking at how the metals have been acting, the path of least resistance continues to be to the upside. And look, you're coming out of a bear market. You're coming out of a nasty downturn, nasty cyclical bear market. When you're early in a new bull market, a real bull market, you don't get, there's not that many sellers. There's so few sellers left because you're coming out of a bull market. The new market starts moving up, and people are fearful there's going to be this huge correction, and it doesn't happen because there's not enough sellers. And so that's why you have to see these markets probably make another leg higher before you have to think about or worry about a sustained correction. At least that's my thinking right now. Let me know what you think in the comments. Thank you for tuning in. I'll talk to you guys again in the next video.